as you know, as the name is, really meant that they are open for discussion. So feel free to interact. We can allow our presenter to take us through the presentation. However, if you do have a burning question, you are free to raise your hand. Use some of the facilities that are online on this Zoom platform to raise your hand or switch on your microphone to give your contribution to the discussion. I'd like to thank our presenter. Her name is Mwawangenda Mpinde, and she's coming from the Capital Markets Association of Zambia, and is really licensed, meaning fit and proper to give us this discussion today. Thank you so much, Mara, for joining us. We are also joined by an audience from through the Facebook platform. You're welcome. For your interaction, feel free to send us messages. If you have contributions or even questions, we'll be able to see them, and we can then respond to that. Other than that, I think we are ready to roll. Just pass on the mic to you, Mwala. Thank you.
Thank you so much, Dingase, and good afternoon, ladies and gentlemen on the call today. Just to confirm that you can hear me loud and clearly.
We can hear you.
Okay, perfect. I will share my screen for the presentation this afternoon.
Just a moment, I see a hand from Chuchu. Is that to confirm that you can hear Mwaba? I'm sure at this point that is what she was trying to do. Thank you so much. Mwaba, you can continue.
Okay, can you see my screen, Dingase?
Yes, I can see it.
Okay, perfect. Good afternoon again, everybody. Thank you so much for joining in this town hall meeting. As introduced, my name is Mwaba Mupinde Ngenda, and I'm your presenter for this meeting. I'm delighted and I'm excited to have this conversation with you. Our topic for this meeting is financial planning, your gateway to achieving financial freedom in 2024. So a brief introduction of who I am. I'm a licensed investment advisor, as already mentioned by Dingase, and my experience has been in banking and investments. I am currently working in fund management with ABC Asset Management, which is a subsidiary of Atlas Mara. I'm also very passionate about financial literacy education. So I am a financial literacy educator, and this is work I enjoy doing informally outside my desk job. So again, I'm happy to have this conversation on financial planning with you. Please do engage in the comment section, on the Q&A section, and I hope we do have a meaningful conversation. So today's conversation is on financial planning and the importance of it. So we will start by defining what financial planning is. Then we'll go into what benefits come with having a financial plan or with financial planning. And then I will share with you 5 steps to creating a financial plan. Then we will dive a little into investing in Zambia, so understanding investing and the investment options that are available for us. And then lastly, we'll look at what strategies we can implement in 2024 in order for us to maintain our financial plan. And then we'll close it off with a Q&A session. So what is financial planning? So financial planning has two components to it, the phrase, so which is the financial bit, which is money, and the planning, which is the action or the process of how you manage your money. So basically, financial planning is how you manage your money, and this is a lifelong process. So what this means is that you do not create a once-off financial plan. And this is not a once-off process. So circumstances change over time. We grow older, we change careers, or we grow further in our careers, and we should be able to plan accordingly as our lives change. So it is a step-by-step guide that, when implemented, can help you meet your diverse life goals or your financial goals. So having a financial plan also help you in order to will help you plan your finances, which will include your income, your expenditure, your investing, so that you can be able to meet your financial objectives. So some of the goals that you can look at in terms of financial planning would include wealth creation, education fee planning if you are a parent, retirement planning if you're a working professional, an entrepreneur, debt repayment, etc., etc. And a good financial plan should be able to help you answer three important questions. And number one, this is where you are now financially. So it should be able to detail your current financial position. Number two is what you would like to achieve. So it should be able to show what your future objectives are, both in the short term and in the long term. And lastly, your financial plan should be able to answer how you will get there. So what strategies or what vehicles are you using in order for you to implement your financial plan? So what are the benefits of financial planning? Why should you consider having a financial plan? And why should you do this as a lifelong process, as I have explained? So from what we've seen so far, a financial plan is you having a blueprint of what you would like to do financially in the future, what you're currently doing or where you are now financially, and what strategies you are using to get to your future objectives. So one of the benefits is that it increases your net worth. Because it is a blueprint, it gives you clarity on where you are financially and where you're trying to go. And once you have that clarity and your objectives are set, your strategies are set, you're able to increase your net worth. And your net worth is simply a figure of what your financial position is. So your net worth is your liabilities, your total liabilities, or the things that you're currently owe, subtracted from your assets, which are the things that you own, and that's what your net worth is. And the goal and the objective in life, if we want to achieve financial freedom, we need to be able to increase our net worth over time. So number two benefit of financial planning is that it gives you peace of mind. So I'm sure many of us that have joined the conversation today will agree that finances can be a point of stress if not managed well. We've all had an experience where you are pressed for money or you're pressed for cash because you need to meet an obligation or you have an emergency that has happened, and we all know what that stress feels like. So when you have a financial plan in place, you are able to have a certain level of peace of mind, which is very important. And then the third point that we'll look at as a benefit is that it gives you confidence on what your next step is. Because you have a clear roadmap, you have a clear blueprint on what you're doing. Even when you get a windfall of money, you get a bonus or you get an increment in your income, you're that extra money too, because you have a financial plan. Another benefit that we can agree on the conversation today is that having a financial plan will keep you prepared for life's uncertainties or emergencies. So the thing with emergencies or uncertainties is just that, they are uncertain. right? We don't know when what will happen, but because you have a financial plan, you are able to prepare for those circumstances or instances where something happens and you need to meet a financial obligation at that point. And again, this point also feeds back into having peace of mind, right? And then having a financial plan will also help you improve your standards of living and also experience a better life as you grow. Because you're growing your net worth over time, your standards of living will get better. And lastly, this is an important point, it improves your financial literacy and understanding. So the thing with having a financial plan is that it makes you curious, because now you're aware of where you are. Now you're aware of where you're trying to get to financially and in your life. You're aware of what your goals are. You get curious about your finances and how to manage them better. And your curiosity takes you into learning. So you will join into conversations like this. You will read about different financial products. And over time, your knowledge and your financial literacy or understanding of finances gets better. So these are some of the benefits of financial planning. So I will move into sharing 5 steps on how you can create a financial plan. So this is not a comprehensive list, but this is at least a starting point that you can use after this call as an individual for you to get started. And also you can go further by sitting down with a licensed professional to ensure that you create a more comprehensive plan for yourself. But I thought it to start it simple and not complicate what a financial plan is. So I can see there's a hand raised. Oh, can I go on?
I think I'm trying to look for it.
I think it has dropped off.
Okay, I think you can please also utilize the chat. We'll pick up your contributions or questions from there.
Okay, perfect. So as I was saying, you
can go ahead. I'll look for it.
Okay, thank you. So as I was saying, you can create a comprehensive financial plan for yourself by sitting down with a licensed advisor or financial planner. But these 5 steps will help you get started now. So we're looking at how we can do better in the year 2024 with our finances. And the first step is for you to determine your current financial position or do what is called a personal financial audit. This is very important. This step is number 1 deliberately, because before you get anywhere, you need to be able to know what your current financial standing is. So this includes what is your current income or what current sources of income do you have right now? What are your current liabilities? What are your assets? What are your current fixed costs or expenditure? And also part of doing a financial audit is also understanding what your net worth is. So you can do a quick calculation for yourself, list down a list of your assets. So assets are things that you own. So money in the bank, investments that you have, you look at the current values of those investments. If you have a unit trust investment, what is the current value on it? If you're invested in the government securities, what is the current value on those investments? So everything that you own, anything of value that you can establish what the market value is, things like property, if you were to do a quick valuation of where your property stands right now, how much is the value of that property? So you make a list of all your valuable things and things that you own and total the current amount of your assets. And then you make a separate list of your liabilities. So this is now what you are owing. So what are your current loan balances? Who do you owe? What institutions currently owing? So this allows you to put your financial position on paper. You're able to look at it and have an honest conversation with yourself. So once you have a total of your assets and liabilities, subtract the total liabilities from your total assets, and the figure that you get is what is called your net worth. So your net worth can be a positive figure or it can be a negative figure. That's fine. The point of this exercise is for you to know where you're starting from, which is very, very important. And once you have learned what your current financial position is, you are now then able to move to step 2, which is to define your objectives, or to have your goals set, your financial goals. So I'm sure many of us are already having these conversations with ourselves, considering the time of the year that we're in. So this is the end of the year. We are all setting resolutions for ourselves, including financial resolutions. So set your goals, and you set SMART goals. So SMART goals should be measurable. Your goals should be attainable, realistic, and time-bound. This is also something that really stands out during this time of the year, of what a SMART goal could be. You could agree with yourself and say you would like to invest 500 kwacha every month in the year of 2024. So you have defined how much you're investing, 500 kwacha, so you're specific. You're measurable because you want to do this every single month, and you have established that this is attainable because now you know your financial position and you know what your current earnings are, and this is also a realistic goal for you, and the time frame is for you to do this for 12 months, which is for the year of 2020 goals. So an example of a long-term goal would be retirement planning, depending on how long you have till your retirement. So your goals should be segmented and they should be SMART, segmented into short-term goals and your long-term goals. And step number 3 that you will go through, or that you can do to create your financial plan, is now to create your investment strategy or your savings strategy. So back to my example of investing 500 kwacha per month, what you then do is, where can you make such an investment? You can afford to put aside 500 kwacha every month. So now you look at what investment vehicles are available for you that match your goals. Because you want to do it for 1 year, what investment vehicles will allow you to invest 500 kwacha for 1 year? So what strategies are you going to use? To dig deeper into a strategy for this example would also mean, how will you remain consistent at investing 500 kwacha? So you can go further by saying you will make sure that there's a deduction done from source, from your employer, for you to be able to remain consistent through your 12-month period. Or you can set a direct deduction or standing order from your bank account into your investment account for you to be able to remain consistent. So your strategies are what will assist you to meet your objectives. Number 4 is creating a debt management. It could be to meet, pressing financial objectives, or to invest, whatever the reason. And we may have heard of the concept of good debt and bad debt. Good debt being debt that increases your net worth, essentially. Bad debt being debt that you take out for consumption, for your lifestyle, for things that are not adding to your net worth. So regardless of what type of debt that you may have right now, it is important for you to create a strategy of how you will manage that debt over time. This is important because money that you are paying towards your debt repayment is money that you can think of as never coming back, because debt is owing. And when you owe, you do not own. But when you are saving or you're investing, you are owning. Those future values of your investments or the future objectives of your investments are yours over time. So the purpose of creating a debt management plan or a debt management strategy is for you to be able to pay down debt as quickly as you can, so that you have extra income to put towards your investment or your saving goals. So especially if a majority of your debt is debt that you took out for consumption, you want to ensure that those repayments are done quickly, so that you can take out the same amount if it still leaves you to be able to live comfortably, and direct that towards your investment goals or saving objectives. So it's very, very important. So a quick example of a debt management strategy would be for you to list down what you own. If you've done step number 1, you already know what you're owing, rather. And then list down the most pressing debt, the debt that you can quickly pay off for you to be able to have surplus income, because that's the goal with this, creating a debt management strategy. And then number 5, with creating your personal financial plan, would be implementing the plan. So back to slide number 1 and number 2, when we were defining what financial planning is, I had actually highlighted the word implementing or implementation. So this is a plan that, when implemented, helps you manage your money or helps you stay on track with your objectives. So you can sit down and go through all these steps, but without implementation, you're still back at zero, because there's nothing that you've done really to get you towards your objectives. So implementation is key. I can't stress this enough. We have to do the work to implement the financial plans that we put in place. So next in our conversation, I will dive a little deeper into step number 3, which is investing or creating an investment strategy. So we will speak about what investing is. So investing is basically putting money aside with the expectation that you will get a return. And the mindset that we have when we're investing is normally that we want to make money, right? We want to make extra money. We want to have financial freedom. We want to create wealth. We want to be able to meet different life goals that we have. So that is the purpose of investing. But also, just to shift perspective, because I understand that all the time we're making an investment decision, it's always with a positive mindset that we'll make return or we'll have a reward out of it. But it is also possible to make a loss on an investment. If you've run a business before, or if you've been investing for quite some time, you may even have experiences where an investment fails to meet your expectations, or you make a total loss off of that investment. And this is quite common with people that run their own businesses. So that's also something that we need to think about as we invest. Investing also should be thought of as a long-term game. So it is not something that may be able to achieve all your life goals in a very short space of time. So you need patience, you need diligence, and diligence speaks back into you being able to implement your financial plan. So there's a quote on the slides that says, Rome was not built in one day. Some of us have really big goals and objectives that we want to meet. Some of us are creating the first generation of wealth in our families, and we need to be able to understand that that may not be a small goal to achieve or small objectives to achieve. But if we stay diligent and stay on course, it's definitely something that is attainable. Another thing to highlight with the world of investing is that Just as there is reward or return when it comes to investing, investing also comes with a level of risk. So various investments will have different levels of risks attached to them. And it's important for you as an investor to understand that as you get into different investment options, and to be able to assess what type of risk profile you have as an individual. So something that is interesting about financial planning, personal financial planning in particular, is that it is personal. You can't copy and paste Mwaba's strategies because they are working for me. They are working for me because of the type of profile that I have. I could be risk averse, or I could be very aggressive in terms of how I manage my money and how I invest. So you need to understand that financial planning is very personal, and it should be able to suit you as an individual. So understand what your risk profile is as an individual, and try as much as possible to be able to get into investments that match your level of risk. This is important because then even when the investment you get into does not meet your expectations, you already know fully what you got into. Maybe it was a high-risk investment or a moderately risk investment. So it's important to be able to understand your profile. So you could be risk averse. So this is somebody that wants to take very minimal risk with their investments or with their money. You could be moderately moderate in terms of the type of risk you want to take, or you could be aggressive. And because life changes and circumstances change, your risk profile may change over time. So all the time you're investing, tie that investment into for a specific objective that you have, and make sure that that objective ties into the type of investment you're getting into in terms of risk appetite. So what are some of the options that are available for us to invest in Zambia? So the first one is fixed deposits or term deposits. Many of us may be familiar with these, and these are offered by banks. So this is very, it's a low risk and very short term. So this is really good for short-term objectives that you may have. And you will normally find these types of accounts with the banks or other financial institutions. And the nature of them is that short term, a year, very few will go at most 2 years, but you can save or use these types of accounts to save for your short-term objectives. The second on the list is mutual funds or collective investment schemes, which are my favorite for obvious reasons. I did mention that I'm currently in fund management, and mutual funds or collective investment schemes or unit trusts, they're also known as unit trusts, are investment vehicles that allow you to be able to invest small amounts of money over time in a collective pool of funds. And these funds are managed by what is known as a fund manager, who then invests that money on behalf of the investors for a return. Mutual funds or unit trusts can be used for varied goals, which is also why they're quite attractive. So they can be used for short-term investments, the long-term investment objectives, medium-term investment objectives, depending on what fund you decide to invest in. Next on, we have the stock market, which is investments into shares or equities on the Lusaka Securities Exchange. So generally, the stock market is meant for medium or long-term investing because of the nature of the assets. So this is very good if you're looking to diversify a portfolio, you're looking to build up a stock portfolio for yourself, for your children. Really depends on what you're looking at. But the time horizon for such investments is generally longer than the two that I've spoken about so far. if you're interested in investing in the stock market, you go through the Lusaka Securities Exchange. I always like to put in when I'm having this conversation that information is there. When you're not sure, you know that the stock exchange is by the LUSE. The LUSE have a website. You can go onto the website. You can visit them in person for you to get deeper understanding of the market and what you're trying to do. The next option available is government securities, which is the treasury bills and the government bonds. The treasury bills being short-term investments, the government bonds being anywhere medium-term to long-term investing. So as you grow or as you learn about these investments more, you are able to tie what investment will apply for what objective you are trying to meet. And then also starting your own business. This is normally a very interesting discussion because as we list down is an investment. But if we go back to the definition of what investing is putting money aside with the expectation that your money grows or you get reward or return out of it. And businesses do offer that opportunity. You put money aside, you put capital aside, run a business with the expectation that over time, your business grows and it is profitable and you are making money out of that. And then lastly, there's livestock, investments into livestock, software development, which can also be looked at as owning a business. So with regards to investment opportunities in the financial markets, I would like to highlight also that all investments are regulated by the Securities and Exchange Commission. And because I spoke about curiosity as part of the benefits of financial planning, I do hope that many of us on the call become curious after this to go onto the SEC website. On the SEC website, you will find a list of licensed investment advisors, licensed investment market players that you can choose or look at as options to invest in. And also because of past conversations that I've had, there's some people that have been misled to think that if a company is registered, by PACRA, it is licensed. That's not the case. Being licensed is different. So just because you hear of an investment company that is running an investment business and they're offering you a return that looks attractive, doesn't mean that that business may be licensed. Very, very important. So do go and look through this, the SEC website. There's also a lot more information that you gain out of that. And also it just helps you to stay out of bad investments and out of all these stories that we've kept hearing over the years. And to dig deeper into just what I have said, so what are some of the considerations you should make in order for you to make smart investment choices or decisions? With the very first being, learn the professionals in the space and speak to licensed professionals. Very important. And there's different types of professionals in the financial markets. There are people like me who are licensed to give investment advice in financial markets, and there's people like insurance brokers who are licensed to give insurance advice. There's people that can give tax advice. Not every person who works in finance can give you holistic advice in order for you to create a proper financial plan. And in the beginning, I had mentioned that it is possible for you to, to have a comprehensive financial plan by sitting down with professionals. And part of being financially literate, part of being a good investor is to always seek professional advice from licensed individuals or licensed companies in Zambia. The second consideration to make is do your research. Again, be curious. before you invest. Now you understand what your objectives are. So what is there and what is available for you in the market for you to be able to invest in. Read about the products, read the brochures, read the different information that is then available for you to be able to make an investment decision and understand those products. Check if institutions are licensed to offer those products in our market. Number 3 is understand the risk that is involved with your investments. I have highlighted this also, but also maybe to give a definition to what risk is. You know, risk can have a very may have a negative connotation to it. When people hear all investments have a level of risk, you may get scared, but that's not the point. Risk is just the possibility, to put it simply, the possibility of an investment not meeting your objective for one reason or another. And this also feeds into the point of different investments will have different levels of risk. So your job as a smart investor is to be able to understand the level of risk that you are taking, and a good advisor should be able to tell you what level of risk will come with the products that they are offering on the market. And the next point is avoid gains. How you can make money if you put money in A, B, or C, but be cautious. Be a cautious investor. We all work hard for our money. My point is for that money to grow, to build financial freedom. So you don't want to gamble with your money. You want to be cautious. So avoid anything that says this investment is risk-free. That's already a red flag. So a proper licensed advisor will never use the word risk-free. Low risk, moderately risk, or this is a high risk product because of A, B, and C. So avoid such investments. Honestly, if you work hard for your money, it pains to lose money. You can make it again, but that wasn't the point of making the money. The point of making the money was for you to be able to grow the money, especially if you're investing. And the next point is to recognize, a smart investor will recognize the power of compound interest. So if you've been around investment conversations for some time, you may have heard this term, compound interest. And compound interest is simply interest that is gained on top of your interest. And I'll highlight also that you do not have to benefit from the power of compounding by investing in one particular asset class or one particular investment. You can compound your investments through different investments. And I'll give an example. So you may have invested in a government bond, and government bonds will pay you a coupon payment, which is your interest every 6 months. You can reinvest that coupon payment into a unit trust for you to compound your interest. So you do not need to use one particular asset class for compounding. You can do it with different asset classes, but it is available also for a specific asset class. So compounding also is a concept in investing that works with time. So the longer your money stays invested, the longer it can multiply. That's the essence of compound interest. And also, if we have young or relatively young people in the meeting today, use this to your advantage. Time is on your side. Start investing small amounts over time and benefit from the power of compounding. We are now in an era of millennials and Gen Zs who do not want to work until statutory retirement ages. So if you want to retire early, use the power of compound interest. Start investing and let your money compound over time. Second to this point is a smart investor will also understand the importance of diversification. So diversification in simple terms is you placing your money in different assets, you know, or the popular term being not putting your money in one basket. So diversification is what will help you counter different risks that come with different investments. So if you have a risky investment, I will not give an example. You can diversify by buying an asset or getting into an asset class that is moderately risk or low risk. You can also diversify not only in terms of assets, but you can diversify in terms of currencies as well. And it's very, very important for you to be able to do that. A caution though with diversification is if you're just starting out in your investment journey, you may want to grow to a certain point reasonably before you diversify into different types of assets. Or if you have an income stream that does not allow you to do so much with your money, you may want to be focused on what your objectives are, your goals are, build up a balance or build up your investments, and then you start diversifying into different asset classes. So if you don't do this with caution, the risk is that you may end up cutting yourself a bit too thin and then getting frustrated as an investor because you're not meeting your objectives. So again, this is why it is important to have conversations or investment conversations with licensed investment advisors. Next to this is a smart investor will plan according to their future needs and their goals. So again, this is a personalized process. So you plan according to what you want to achieve, not what you've seen the next person do. And if you plan according to what you want to achieve, so meaning you have a clear vision of what you want to do, and you avoid, you know, falling for things like lifestyle inflation and your money going to things that are not important to you. I'm a firm believer in doing and achieving what matters most. If you're a parent, what matters most to you? I'll give an example. As a parent, it really matters to me that by the time my daughter is able to get into university, I should be able to afford that. So I have a child that has been consistent with what she wants to become when she grows up. So over the years, she said she wants to be a pilot. And so I can already plan towards that. What are the current fees right now? What, you know, would be the future estimated cost for this? And for me, doing that matters most to me. So all of us will have different things that matter, and that is the point of this: do and achieve what matters most. And lastly, a good investor will recognize the benefits of long-term, regular, and diversified investments. This point speaks again into diligence, into consistency, for the implementation of your financial plan. Very, very important. So next in our conversation is, so what can we do? So now we have a financial plan, or at least we have something clear for us to be able to do and implement as a financial plan. So what strategies can help us stay consistent and implement this plan? The very first thing is maintaining a budget. This may sound like a very, you know, a common song or a common theme, having a budget, but having a budget is the cornerstone of managing your finances. It is very important because your budget is your plan on where you are spending your money, be it, you know, debt repayments, be it day-to-day expenses or fixed costs that you pay on a monthly basis, and investing. So your budget should be able to reflect where you are directing your money. But an interesting thing again about a budget is that you may have a budget, but you need to implement it. Right. So a budget, what I would like to point is that your budget should reflect plan as well. It should reflect how much you are investing. Back to my example of investing 500 kwachas per month. Your budget should reflect that. If you are paying down debt and you're making extra repayments towards your debt, your budget should reflect that. because that is essentially you directing where your money is going. And second strategy is to track your finances. What does this mean? Is your money going where you are intending for it to go? Since you have created the budget, it is very, very important for you to track where your money is going. How can you do this? You can do this by, on a regular basis, printing out your bank statements. So your bank statements, especially for your transaction accounts, will show you where you're spending your money. Where have you been swiping? You know, what appearing on your bank statement. If you do a lot of mobile money transactions, go through your transactions. What are you buying? Are you buying too much data, or are you uses? Very important, especially the bank statement way. It will really show you where exactly you're spending your money, because it is easy to get from January 2024 to December 2024 with a financial plan that you haven't implemented, or you've implemented halfway because you've not been seeing or paying attention to where your money is going. Tracking your money also means tracking your investments. If you have made investments, check on your investments, check on your statements. Remind yourself, what have you done with your money, so that you're able to see where your money is going or where your money has gone. The third is to invest in your financial knowledge. This is important. You don't know what you don't know. And there's always something to learn. There's always something to learn. Get onto such course. There's a lot to read online as well. There's a lot to read. I have highlighted the Luce website, get information and continue to improve on your financial knowledge. Follow the right content online. A lot of us are always scrolling, so that you're able to improve your financial knowledge. Very, very important. And then lastly is speak to licensed advisors again, so that you're always, in the right spaces. And the thing with the quality of conversations that you have with your advisor is that it depends on what you know. When you know so much, the quality of your conversation with your advisor is different. You're no longer asking, so what does this product, what are the features of this product? You'll be asking, where do you see the performance of this product in the next 3 years? Or what is your analysis of this? So it gives you deeper understanding, and the quality of your conversations with your advisors get better once you increase your financial knowledge. So now we can get into the Q&A. I hope I have not been too fast. And I hope that what I have shared so far has been insightful. I can see we have 22 questions, I think, in the Q&A space. I don't know if I will read them out, or Makum Dingase, you come in for this.
Okay, let me help. Thank you very much. Well, I haven't been too fast. I'm sure everyone has enjoyed your presentation. It was quite comprehensive, well explained, and no wonder we have so many questions. If you haven't understood, it's a pin drop silence, really. Our audience, thank you for being very patient and not raising your hands, but placing your questions in the chat. However, if you want to be voice interactive, feel free to raise your hand. I'll go ahead and read some of the questions that we have so that we can get moving. We are at, we only have actually about 10 minutes to ending our town hall meeting. So I'll go into the questions right away. Okay. So I have a question from Matilda Piri. She asks, how are you able to give a sorry, are you able to give examples of mutual funds that are available?
Okay.
And for this one, Pinda, please answer as Simas.
Okay.
Of course, you made your
Okay,
you did
so
tell us that
to
yes.
for sure.
Okay.
Okay, so to quickly answer your question, Matilda, I will go back to my statement that I say that there's a list of licensed fund managers on the SEC website. So that could be your starting point. You could pick which one from there, depending on varied reasons, but that could be a place where you can get started. So you will find a list of licensed fund managers on the SEC website.
Exactly. And there was a related question. Maybe I should combine it right away, which was asking or just really lamenting about the no response.
Is it the one
someone was saying
by Lucy?
I have been trying. Say I've been trying to get hold of fund manager, but they don't respond. Don't know whether it's gone. Anyway, we can yes, so there was that question. Please look for the list on the SEC website, and I'm sure you'll be able to then find the contacts and get through to these people. There's a hand from Simon Nyorongo. Please go ahead. Simon, are you, Sitwana, could you help Simon with the microphone, please?
Simon, you may please go ahead.
Can you hear me?
Yes, we can.
Okay, thank you. I'm the one who posted the request for recommendations for a fund manager. I've been to the SEC website and I picked up a few fund managers. Unfortunately, I think I picked 3. None of them has responded to my inquiry, and it's probably 2-3 months down the line. And I'm just wondering, if people that are in this business cannot respond to you for a query, what more if they've got your money? So I'm a bit confused. So I need help with, maybe if people have got recommendations, they can talk to me on the side and help me out, because I'm really interested in unit funds. I've done them before, I've seen the benefit, and I want to go at it from the Zambian side. Thank you.
Okay, thank you, Simon, for that contribution. And I'm sorry for the experience that you've had with I do hope you get answers from other people on the call, but again, do go through the list on the SEC website, reach out to a different one, and you will get a response for sure.
What you can also do, Simon, is to perhaps share with us in confidence, in email or something, which of those you contacted and never gave you feedback. We can try to establish if the emails are the current ones, if you used email or the phone numbers, just to see if something that needs refreshing. Maybe also just find out a little more about that experience, which is not a good one at all. Thank you. We go to the next. It says, how is our investment opportunities secured whilst in the diaspora? For example, tax status, etc.
There.
So that question, Mara, is speaking to security of investments for those people who are in the diaspora.
Okay.
Please,
Okay. This is a very interesting
investment.
Okay, this is a very good question, and I'm happy to see that we have people in the diaspora on the call. There's definitely a lot of opportunities that you can take advantage of on the Zambian market. It is a regulated market, so that already speaks into the security of your investments. So as long as you are working with licensed investment advisors or advisory firms, you are able to have peace of mind, to know that the security of your investment is definitely well taken care of. And you know, the security of investment is what you consider even before what kind of returns you will get. So this speaks into who are you dealing with, who are you working with, who are you placing your money with, and are they regulated by the SEC? So please do dig into the opportunities that are available for you back here in Zambia. I can see there's tax status says ETC on your investments. So as you have the conversations, depending on what investment you are considering, you'll be able to know what your tax obligation, if any, on that investment will be, what your returns are, what the level of risk is with that investment, and so on and so forth. So it all starts by you having the conversations with the licensed investment institutions and individuals. I hope that helps to answer the question.
Thank you, Mara. I think to that, it only means you have to ask and ask until you are happy and very clear with the investments that you're embarking on. Very good
For
question
sure.
indeed. Mary, she asked, how can I get more information about investment schemes?
Okay. The question is a bit vague. So what type of investment scheme and who's offering you that investment scheme? So maybe you start there. So who's offering you that investment opportunity? And what is the opportunity? So that's where you get more information about what you're considering. Then you'll be able to have in-depth discussions with the institution that is offering you the particular investment product or opportunity. I think that's the best way I can answer that question.
Yes, I think precisely why we even bring these discussions to the public is to really unveil also what kind of investment schemes are available in the market, and these are the ones that are authorized. Otherwise, there's many out there which come even unsolicited, and that is where you have to be very sure now about the information that you need around those that you might find that are just coming through different means and so on. So like you've heard in the presentation, we have, I think Mwaba has tried to talk to a number of them, and those are the ones that are under authorization by either the Securities and Exchange Commission, the Bank of Zambia, and even some insurance schemes must be licensed. Just ensure that they are licensed by either of the regulators for your own security. Otherwise, you might not have recourse to the law should there be anything that goes wrong. We have, I think, some more questions. Yes, quite a loaded one now. It says, great presentation, Mara. Number one, given the potential impact of inflation on purchasing power, what strategies can be employed to ensure that my investment outpaces the rate of inflation over the long term? And then he goes on to say, what is the impact of the new bonds issuance method on one's financial plan as recently pronounced by BOS? hopefully you can tackle those.
Okay.
Mara.
Thank you very much, Jones, for the question. It's a very valuable question. So what is the impact of inflation on the purchasing power of your money, and what strategies can you put in place to outpace inflation? So number one is you want to be looking at investment opportunities that are outperforming inflation. Yes, I think that will be your starting point. So what opportunities are available in the market that are outperforming inflation right now? So inflation is reduces the purchasing power of your money over time. So you look at those options, and then the second thing that you can consider also is diversification. When I mentioned or explained briefly on diversification, I did mention that it's not just about diversifying in different assets or asset classes, but you can diversify in terms of currencies as well. I'm trying to avoid to get into deep with this question, because I think this platform is here for education purposes and not for me to be able to give investment advice. But look for investment opportunities that are outperforming inflation. That is a big starting point. And look for ways that you can diversify in terms of currency. And then what is the impact of the new bond issuance method on one's financial plan? So going forward, if you're considering to invest in the government bonds, what essentially means, so in right now, the bond structure allows you to be able to earn in two ways rather. So the first being through the coupons, which you receive every 6 months as interest, and the next being in terms of capital appreciation by the end of the tenure of your bond, because you were buying bonds at what is called a discounted price. And what you make on top would increase your capital that you've invested in the bond. But going forward, that capital increase is no longer available as an option. So if you're investing in bonds, what it would mean for you is that you're investing for the income that will come through the coupons. So that is what I would spot as a major difference. So if you're considering bonds, look at it as a way of having a fixed income that will come through every 6 months for the life of that bond, and then look and see if that fits into how you want to manage your money, or what your objectives are for your money. I hope that helps.
Okay, so I think the next one is the one that Simon spoke to. He was looking for recommendations for fund managers. We finally found that question, and it has been dealt with. We have a question which says, are there any recommendation in terms of books a layman can read to get more acquainted with financial planning?
Okay.
Yeah.
There is definitely a lot of literature that you can read. I don't have a book that stands out right now in mind, but this is something that you can run on your, like you can search on the internet. Books for laymen for financial planning. I'm sure you will find so many articles, not even just books. You can start with short articles, videos that you can watch, and then now you can get into what those book recommendations are. I know there's a popular book, The Richest Man in Babylon. There's The Psychology of Money. Yeah, but you can start by just running that and running that in your search tab and seeing what pops up.
Okay, you can also look out for this. It's on our website, and I think on our Facebook page, but we'll also drop it in the chat. It's called the Set Guide to Saving and Investing. It has, it's like a journey, actually, everything that Mwaba explained, and perhaps a few simulations here and there when you're investing. It's quite comprehensive, and it will surely help you with getting started with saving and investing. It also explains the differences between saving and investing and so on. I'm very sure that it will be able to help. It is not a very long book. It is just very quite nice to go through and accompany you, especially if you're starting from not knowing anything. Then you can complement with the other ones that Maba has also shared or recommended. Here it says, what are the steps one needs to take to become a financial advisor? What steps did you go through, Maba, to become a financial advisor?
Okay, this is very interesting question. My personal journey anyway, these are I applied for a job, I got a job, and that's how I got into this space. But if you want to be intentional and you are passionate about the subject, obviously it depends on what you if you've already gotten maybe your first degree in something else, there's so many other courses that you can take to add on to that for you to be able to understand the world of financial advisory or financial planning and equip yourself for that objective that you have. And then the next thing, obviously, is looking out for opportunities in the space. I have already mentioned that there's a list of institutions that are licensed in Zambia on the SEC website. Start there and start to look for opportunities to work with those institutions in the market. And once you get an opportunity, also being passionate about what you do. I really do enjoy having very good conversations with my clients. And also it's work that is never mundane, so be passionate about it as well. Commit to your learning once you do get an opportunity to work in finances or in the market or as a financial advisor. I hope that helps.
Yes, I'm sure it does. There is on the checklist, there is a checklist on the website. You go to the licensing section, you find all the requirements that we'll be looking for when licensing, because the license is conferred by the SEC. So there are a number of requirements, and part of them have to be, of course, your qualifications. And then you also have to the recommended pathways or courses that you have to undertake that the SEC is confident that will empower you with the right knowledge and the right understanding, ethics, and so on that an advisor should have before they can work as a professional in the market. So look out for that checklist, or you can even email us or phone us or come to the SEC. We can have a sit down with you and we can advise you. And then there's also a fee to becoming an advisor once you make that application. So they are called fit and proper requirements that you'd need to adhere to before you can be licensed. Other than that, there's also a check on your criminal, what can I say, on your status in terms of whether you have a background check on you that is undertaken. That is to just make sure that there has not been any criminal-related activities on your part in the sector that show that indeed you did not do something in accordance with what would safeguard the interest of investors. Remember, the SEC is about safeguarding the interests of investors. So we have to make sure that you're going to give proper advice, that we will make sure that we ensure the interests of investors are met. And that is our first and foremost interest, that we we have to take care of in our work. Okay, there's quite more questions coming through that we have run out of time. This question that is talking to the My Luce app really has to be addressed to the Luce first. Unless you're not happy with how they have redressed your issue, you can come to the Securities and Exchange Commission. You can write, you could choose to write to info@sexzambia.org.zm, or you could phone or come through personally. Most of them are really just saying thank you so much for the presentations, and yes, we will ensure that we send the presentation, and also the State Guide to Saving and Investing, which is just going to reiterate some of the things that Mwaba was talking about. And nice to see someone saying, my goal is to start investing in 2024. Big ups to you. You're saying you're risk averse, so what kind of investments could you, and again, you really need to sit down with a SEC licensed investment advisor for more comprehensive advice on what specific journey. Remember, Mwaba said, your investment journey will be different from somebody else because of your uniqueness in terms of where you are. An investment advisor will assess your needs, looking at your goals and also your risk profile and many other things that are unique to you. And they'll look also at the funds that you have available for investing, and then they'll advise on what are really the proper or suitable investment vehicles or products that are available that will really help you with achieving your financial goals. I would really love that we go on, and it's been really nice having you, but we have run out of time, and we are actually at 15 minutes over the 16-hour mark that we promised to you, our participants. It leaves me to say thank you so much to our presenter, first of all, Mwaba, for giving us a very fruitful and very informative presentation. Also, thank you to our participants who took time to learn a little more about this financial planning and how they can how you can set your goals and get on to becoming financially healthy or financially well off. Thanks for all the questions. They benefited everyone, even those who didn't ask. Thank you to our our viewers on Facebook attending to the live stream. From me, I wish you a happy new year, and see you in the next meeting.
One question was that.
Mm.
Good to get perspective.
Yeah.
The investment advisor,
Yeah.
how advantageous a government bonds with a municipality,
Yeah.
you know, to invest.
like cars and electronics. They looked at it first, but they don't hold their value. So start building your long-term wealth by investing in long-term money makers. You see, I don't want you to wind up like my friend Jeff. I remember back when we were teenagers.
Hey man, I'm 18 years old. I'm living for today. Investing's for old people in their 40s.
Hey man, were you just in my van, bro? This was the coolest thing on the road back in 1981.
Yes, Jeff, but now you live in it.
Okay,